have I got a treat for you on today's Q&A. I have Taylor Kenny here, and I love her, as you guys know, and we're going to do the Q&A together today.
I am
hopefully more. Hopefully more.
I am so excited to be here. Thank you so much, Lynette.
Oh, I'm very glad you're here, and you know that that's true. So let's just dive right into the questions.
Perfect. That sounds great.
You start.
Okay, well, one question that I see all the time on videos is people are always asking, how would businesses make the transition towards accepting gold to silver on a day-to-day basis? What would that actually look like?
Well, that's really interesting. That's a great question. And what history, even recent history, shows us, especially since everything is computerized, first of all, the movement in the price action of the gold and silver is easy enough for the stores to access. If there's so that when a product comes up there, then they know that conversion, they can set up the algorithm to convert automatically to how much gold and how much silver. And we've seen this in South America actually quite a bit. You know, additionally, if it's something that needs to get weighed, like produce, for example, again, there's that conversion. They've got the weight. They know that the nominal dollar price, and then they can convert that easily to the weight of gold and silver.
So what you're saying is it would actually be easier than probably a lot of people think it would be.
Oh, absolutely. Yeah, it's very easy.
Yeah. Terrific.
Yeah, and in Venezuela, actually, they will have the price in the bolivar, because they still legally have to accept the bolivar, and the price in gold right next to each other. Mm-hmm. So you could even see it before you get to the counter. Of course, in hyperinflation, everything's got to be tied to the inflation. But yeah, it's really an easy transition.
Yeah, absolutely. Perfect. Well, another question we have is about Japan. So Japan, they're printing more money than the United States relative to its size. Mm-hmm. If that's the case, why is Japan not going into hyperinflation?
Because they're having to deal, you've got deflation and as one side of the coin, and inflation as the other side of the coin. Mm-hmm. And what Japan has actually been dealing with since the early 90s is a major depressionary or deflationary problem. And so the more money that they print, here's the fallacy. I don't know why they call all that money printing stimulus. Has it really been stimulating the economy as a whole? No, it's been stimulating select groups. Okay, so the reason why we aren't seeing Japan in a hyperinflationary stage yet, and remember who puts out those official numbers. So the average Japanese person is dealing with a lot more inflation than we see because we just see the official numbers, and those are juggled a little bit. But the reason that they're not really experiencing that is because the deflation is so much greater than the level of inflation that they're pushing into the system. That will change. I believe that's already changing now, though.
That's what I was going to say. So you're saying that number one, it could be even worse than we think it is currently today. And number two, it's going to continue in that direction.
Oh, absolutely. And I would bet anything that it's worse than what we could see, because even when we look at the U.S. numbers on things, is that accurate? Or is that, they don't change behavior. They just change the way they account for that behavior and hide an awful lot from us, whether you're in the U.S. or you're in Japan or you're in China or, I don't know, take your pick. Doesn't really matter.
That makes sense.
Doesn't it?
Yeah.
But I want to know, really, in your personal life, how have you noticed this past year so your purchasing power is decreasing? How have you personally noticed that?
Oh, everywhere. I mean, I know that's a simple answer, but I go to the grocery store, of course. We all know food prices have been insane. And not just grocery shopping. Try going out to eat. It's ridiculous.
Yes, it is.
And it's not even just your entree. It might be ordering a soda or an appetizer. Those prices are through the roof. What used to be maybe normal is now considered a luxury. Mm-hmm. Not only that, I would say household goods, staples, toilet paper, paper towel, cleaning products, you name it. Those bills have gone up. Another one for me, too, is recreation. or entertainment. I went bowling the other day, and it was crazy. I think it was $50 for an hour, then $6 for rental shoes, $10 for a beer after tax and tip. It's no longer just an easy, casual night out. It becomes a massive expense.
Well, if your income doesn't keep pace with that, then how do you deal with that?
That's the question. And I can only imagine how terrible it would be, too, if you have a family of 4, 5, 6. If I'm one person, imagine multiple people trying to enjoy something they did even a year ago.
Yeah.
It's tough.
Yeah, but they keep telling us the consumer is in such good shape. Yeah.
I think we're all living it.
Hopium, right? They're telling us hopium.
We know. So
Yeah.
Well, I've got another question for you, too.
Okay.
I'm curious, if they can create as much gold as they want in the spot market, and they can control the value in a reset, how would the real value of gold ever be realized?
Oh, that's a great question. Anybody that is trusting the spot market to tell them how much gold is really worth is out of their minds. They're living in fantasy land, because that's really just used to control the visible price. But what we are already seeing in the physical market are that premiums have gone up a lot, and especially in the collectible market, that's where we're seeing in the ultra rarities where the 1%ers live, making new all-time highs. So here's the thing. When the public loses confidence in the currency, that's the problem that high inflation creates. People start to lose trust, right?
Right.
So when the public loses confidence in the currency and in the system, in those that are in power, well, that's when we're in a hyperinflationary event. They have to get that confidence back, right? That's when they do the overnight revaluations. Understanding what the true fundamental value of an ounce of gold is, and it's a little nuanced, but anybody can determine somewhere near that's where that's likely to go, right? What we don't know is what the coverage ratio is. So let me explain how anybody can get that really simply. And you're not going to get to the penny, but you're going to get reasonably close, right? Because you've got your good money, right? And there's a finite amount of gold in any age, in any form, and it's recoverable. So it's all monetary at its base. Plus, the Department of the Interior, if you want to get more specific, every year lets you know how much more gold is yet in the ground. So in-ground gold, right? Now, the fiat money, the government-based money, is based on debt. So if you want to make your life easy, you can make it complicated, but if you want to make your life easy, just go to the world debt clock and pull that number. It's much higher, actually, than what they're showing, but it's also a lot more work to ferret it out, and I'm not really sure that it's worth that extra time. Okay? But the amount of gold that exists is real easy, and the debt clock is real easy. So you just divide the debt, buy all the gold that there is, and you have to understand, too, that when you're looking for fundamental value, you want to know the single most important function of this asset or this instrument. So for gold, for me, the single most performs a lot of things, but the single most important function is to hold its value over time. Okay? And then when you look back on history, that's how I know how to get that, because that's what I look at, right? So you divide all the debt by all the gold, and that gives you a number in nominal terms, in terms of fiat, which I know Eric will say, 12,000 or so. The last time I checked it, my number was a little bit higher because he might be doing something a little more complicated than me.
Okay.
I'm not going to get you to the penny, but I'll get you reasonably close. And that's how you know on any instrument whether or not it's undervalued, fairly valued, or overvalued. Therefore, do you want to buy it? Do you want to hold it? Do you want to liquidate it? With fiat, I know you asked me about gold, but with fiat money products, The real trend, they're getting you to look at the stock market going up because then you feel like okay, and maybe you even feel rich, right? But the reality is it's all about purchasing power. I don't care how many digits you have. I care about what you can convert it into. And 100% of the time, every single current fiat currency, government-based currency, has gone to a big fat zero. That's the real trend. And 1 trillion times zero is still zero.
Versus gold.
Correct, which holds its purchasing power value. I mean, that's been proven for 6,000 years.
Right.
How much more proof do you need? And it also then puts you in an opportunity to frankly take advantage of this whole transition, because there's always opportunity in change.
So based on what you're seeing right now then in your own research, you would say that gold is undervalued?
Oh, severely undervalued.
I assumed, but
Really, because a rising gold price is an indication of a failing fiat currency. And more eyes that get on it, the more people that want to move into it. Now, if you're going to move into it, Wall Street and the governments and the central banks' preference is through ETFs, which is not real gold. It's simply designed to mimic the spot market movement, right? Which doesn't tell you what the fundamental value is, but all you own is shares in a trust in a diminishing asset, because they sell off the holdings, the underlying holdings, on a daily basis to pay their fees. And you can see all of that in their 10Ks. I mean, that's not really new news, but people don't look at it, right? So no, you got to have the physical. And in China, actually, the premiums just hit an all-time high. And we're just talking about monetary gold in there. An all-time high since they began recording it.
Wow.
What does that tell you? Tells you a lot. And that's happening in the U.S. in the ultra rarities as well. All-time high. Let me ask you a question.
Sure.
Do you think that the hyperinflation has begun and people aren't just aware of it yet in your personal everyday experience?
Yes, I absolutely do. And I think that people are starting to be aware. We've seen a lot of people removing their money from banks, which is an early sign that people are becoming aware. But I think that it's really just beginning. So we don't know where it's going to go. I mean, I would love to hear your thoughts on this.
Well, I would actually agree with you because, and I've actually been saying that for a little while now, once the inflation started to kick in, that I felt that this was the beginning of the hyperinflation. Now, what's interesting, and I mean, we are living through history. We are absolutely living through history. What I think is interesting is for a while there, you were watching all of these headlines on a global basis. Oh, they've got control of inflation. Inflation is coming down. Of course, they remove the volatile food and energy because you don't need to eat and you don't need to put gas in your car or heat your homes or anything. But the reality is that it's proven stickier than they thought, and it's rearing its head again. And that puts us in a very fragile condition, because the only tool that they have to fight the inflation with is deflation. That's why they have to raise the rates, right? So that forces them to raise the rates higher or keep them higher for longer, which is what Fed Chair Powell and a lot of them are saying. Some of the other countries that have started to bring the rates back down to stimulate the economy, getting people to borrow more money, they're finding that the inflation is coming back again too. So they're basically, pardon me, damned if they do, damned if they don't. It doesn't matter what they do in this point. And all of these unique things that they say, wow, we haven't seen that before. We haven't seen that since 2007. What was happening in 2007? The great financial crisis was kicking into gear. It wasn't visible to the public yet, but it doesn't mean it wasn't happening, right? So we are still in the early stage of it, which is why I think that anybody that has variable rate debt needs to get rid of it now, as quickly as possible, because if you hold that into hyperinflation, you're never getting rid of it. But so now we've had a little bit of at least a visible pullback in the rate of inflation, not in the prices, but in the rate of inflation. But that's rearing its ugly head with what's happening in the oil markets. And, that whole group of oil producing nations has said that they would like to see not just $100 oil, but they actually want to see $110 to $120 oil. And we're at somewhere around 95-ish at the moment. So how does that impact the gas prices and your ability to go out and have an evening or, spend on, we've got Christmas coming up, the holidays coming up, and that's the big question is this going to impact how people shop in the holidays? We're a consumer-driven economy. We're in real big trouble.
I imagine so. I'm curious too, as someone who is always learning and so curious, you mentioned something that stuck out to me. You said the inflation rates are pausing or maybe coming down, but prices are staying high. Can you explain that a little bit more? Because I'm sure I'm not the only one who still struggles with that and understanding how is that possible?
Well, part of the goal of governments and central bankers is to create that cognizant dissonance. Right? And when you're confused, when people are confused about something, they become like deer in a headlight. So I was talking about your personal, asking you about your personal experience and going bowling and going shopping and all of that. Have you seen the prices go down?
They're only continuing to go up.
So it's the rate of inflation that's slowing, but they don't want you to understand it because their job is to keep you in the system, keep you with the fiat money, keep you away from what would actually protect you, the gold and the silver, because it becomes invisible to them. But you have to remember, the Bank for International Settlements, which is the central banker's central bank, has said gold is the only financial asset that runs no counterparty risk. They didn't say one of the two or one of the three. They say it is the only one. You hold it, you own it. So that's why I have that motto. If you don't hold it, you don't own it. Period. It is really that simple. Should we take some questions?
Absolutely. It looks like we have a question here from Michael45. He asked Lynette, how can I break down the risks of derivatives in simple terms for my family and friends when you discuss them?
That is really, really hard. I think a really good example of derivatives that might be easy to explain is when I found in the Bank for International Settlements that for every 1 ounce of physical gold, and so the Bank for International Settlements tracks the derivatives, right? It's just a big leverage bet. And here's the leverage. For every 1 ounce of physical gold that exists, the markets, Wall Street, has created 65,000 ounces of gold. Now that's leverage. Okay, and that's the derivatives. And they have derivatives against interest rates, which have to be exploding. They have to be with that rapid rise of interest rates. But it's the people that create those derivatives also rule over how they classify a default, and they keep that hidden. So it's definitely like an iceberg. All we see is this teeny tiny tip, and the derivatives are sitting underneath the market. When I counted them the last time, and so I'm telling you right now, they're a lot higher than that, it was 1.45 quadrillion. Quadrillion. And that was just the notional value, which means, and every single entity, FDIC, the Federal Reserve, the IMF, the BIS, take your pick, it doesn't matter. Every single entity admits in writing that that nominal value does not reflect the true value that's at risk. So it's like everything is built in derivative terms, everything is built on a house of cards. And Things have to go perfectly to keep that house of cards standing. Well, you think things are going perfectly now? So, I mean, it's really hard. Derivatives are really complex and they're really hard, but simply put, it's a big leverage bet. And then if you give them that example, and I'm sorry, it wasn't 65,000, it was 62,000. One physical ounce of gold, 62,000 ounces of derivative gold that does not nor ever will exist because there's a finite amount of gold. And I hope, Michael, that answered your question.
Absolutely. We have another one here from Undone Gun. It says, can you please talk about WorldCoin and the World app, aka Digital ID? Is this something we should be watching?
Well, you know, I did a piece on the WorldCoin, but you definitely want to be staying tuned for next week because the IMF is bringing out the SDR as a WorldCoin. And I think that it's most likely to be the IMF because the SDR has been around since '69 and it's a basket of currencies that's easy enough to include every currency. So I'm going to be doing a piece on that. Should you be watching it? You should. But I really think it needs to come from a credible source. I did a piece on the WorldCoin, but that was from a private entity. That's not going to have enough clout and enough backing. But the IMF, that's made up of every Treasury Secretary and every central bank chief in 190 countries around the world, yeah, that's got enough clout, that's got enough backing, and they keep control. They're not going to give control of the money supply away easily. But do you know how that you can fight that?
Tell us.
2 ways.
Okay.
Number one, you vote with your wallet, right? So if you position into gold and silver, that's your vote. If you keep your wealth in fiat money, that's also your vote, right? This will protect you, that won't. But the other way, and I'm getting chills again. Every time I talk about this, Taylor, I get chills. I did make mention that I just recently came back from events in Australia and New Zealand. And in Australia, at the second and third event, I threw away my normal playbook and I just talked about community. And that's how we can battle it. We have to create a global community that comes together to support each other because there are way more of us. Remember, we're the 99%. And we don't need to get 99% of the people to understand what we understand. We just need a very vocal, smaller percent. And I made a commitment, not this Tuesday, but we will be coming out with a 5-minute video, 5 minutes. And I'm going to try and figure out how to help those people that are having trouble making that paradigm shift, how to help them make that paradigm shift. So bear with me, and I need to get response from it too. How, when you showed them, you can get anybody to sit for 5 minutes, right? They can get it here. They have to get it here, and they have to get it here at the deepest level so that they have the ability to move forward, overcome that cognizant dissonance, right? Because that's what keeps people stuck. We've got this lie that we've been told since the day we were born, and we're asking people to see the truth. And it's hard. How many times can you be lied to and you do not know the truth?
I just got chills too. I did. I
Right.
really did.
Right.
Yeah.
I mean, I'm telling you, since I started talking about community, I know that's what we need to do. There is not one doubt in my mind. And we have a global following. I mean, how wonderful is this? So we can do this. I'm just getting waves of chills. And I was talking to Morgan, my farm manager, this morning. But what attracted me, aside from her skills in many other areas, what really attracted me to her is that she's been learning how to build community since 2013. So she's going to be working with us on this. And we actually have a focus group in Thrivers, it's thriverscommunity.com, where we have a person in there that is homesteading now and doing everything themselves, and it's just exhausting. And they don't know how to build the community around them so that they don't have to do everything themselves, and we're going to be figuring that out. So if you haven't gone to Thrivers, do so and join the community, and we have that conversation every Tuesday at about 1:30. Isn't it about 1:30, quarter of 2-ish? Something like that. Come and help us figure this out. But I am 100 bazillion% committed to figuring this out, because that's what we have to do to battle the CBDCs and this one world currency and this new world order, and come out on the other side of this with a more fair system so that you're not working for the 1%. I mean, I feel really strongly about it.
I think that sentiment is shared. I know I share it and others do too. And not only to make this community stronger, but to give people tools to help expand the community too. Expand the message. Yeah.
Exactly. Exactly. One person can't do it all. But we all bring gifts, right? We all have talents. We all have things that we're thinking about. So join us in building this community and making and shaping it in a way that benefits everybody, that supports everybody. Because that's what a good community does. It supports everybody in the community. And, you know, maybe somebody doesn't have the means to buy a lot of gold and silver, but hey, they're a great farmer, they're an electrician, they can build stuff, they can cook. I always think you should have a good massage therapist in every community, because after you're out there working really hard, you need a little massage, you know, but everybody has a talent, right? So come help us. I mean, that's really what we have to do here. That's really what we have to do. But if you haven't also started your gold and silver strategy, click that Calendly link below and get that set up. And you want to put your goals first, because it really has to be that what you're trying to accomplish, everything you do supports that, right? So there's that Calendly link. I mean, our strategy specialists are brilliant. We're all executing the same strategy, just kind of tweaked for yours. And we really are all in this together. And I, for one, you've been doing such a fabulous job. Your videos are great. I mean, it's good to break it down to a 101, because frankly, I've been doing this my whole life. And so what seems like a no-brainer to me, if you're new to it, it's not going to be a no-brainer to you, but I can't see that, right? I mean, I try, I do my best, but you have much clearer eyes in that. So, you know, you are very welcome member of this team and of this community, honestly.
I so appreciate that, Lynette. And I love you too. I really do.
I know.
I'm so happy to be part of the team, and like you said, part of the community. It means so much to me to be helping others. That's really what it's all about. So,
isn't it?
Yeah. Yeah.
It's this community, and everybody that's watching this, you're invited to come and join us and help us do this, because you know, we're all learning. You know, Morgan is going to bring a wealth of her experience to the table, but we all have to pitch in with our gifts. And no one person can know everything. And that's why it's so important to get everybody involved. And I will figure out how in 5 minutes, which I know I'm saying this and I'm making this commitment, it scares the Hades out of me, to be honest with you.
You can do it. You can do it.
I know. And you know, the other thing is when we put that out to people, when you view it, when others view it, I don't really want to hear, oh, that was great, Lynette. I want to hear how it could be better. Right? So this isn't really a one and done. And if we do it and you share it and you don't get the results that you want, I need you to, you know, I need everybody to see, how can we do this better, right? How can we do this better? As a stockbroker, Shearson gave me something that I use to this day, and I think I shared this with you before. Yeah. When things don't work the way you want them to work, instead of kicking yourself and going, oh, they didn't get it, You go, well, what did I do right to get as far as I got? And what can I do right to get even further? So that's what I need. I need that feedback. Together, we can protect ourselves, our family, our future families. We can do this. I know we can. And I'm getting chills again. We can absolutely 100% do this. And I know we ran really long, but we've got some great recent videos that are out, and especially the one that I just did last night, Ignore This at Your Own Risk, because there's something that's happening in the Treasury bond market that is really unprecedented. And it is the foundation of the global system imploding. And you better not, please don't ignore this. But we've got, well, what about the things that you've done recently?
Well, Michael, you'll be happy to hear I'm doing a 101 on derivatives this weekend, actually.
Perfect.
So even breaking it down from a bigger picture to what really are derivatives and why they matter to you. So.
And you do it much faster than I do.
Which
Which is really good. It's good. We have to have different perceptions and different perspectives. And guess what? We don't even have to always agree. And that's okay. I can respect your research, right? And your opinion. And that's what I think everybody should do, is they do their own due diligence and you come up with your opinion, not based on hopium, but based on facts. And then we can share that, and maybe I see something you don't, maybe you see something I don't, and together we can make that understanding so much more powerful.
Absolutely. We're all learning and growing together.
Exactly. So if you haven't already, make sure you subscribe, leave us a comment, give us a thumbs up, and share. And remember, financial shields are made up of physical gold, physical silver in your possession. And until next we meet, be safe out there. Bye-bye.